This is Binu Joseph from Inditrade. At the end of last week, most of the global markets rallied on signs US lawmakers would reach at least a short-term solution to avert default. This week, the Indian market will take cues from the Q2 result, the inflation data, and the final outcome of the US debt ceiling later this week. The indices may start on a weak note this week following the August IIP data of 0.6% against expectation of a 2.4% growth. Last Thursday and Friday, markets rose on hopes for a deal in US debt ceiling, but no progresses were made as of now, and so markets are likely to be under pressure. Later in the day, there would be some stock-specific movements based on Q2 result expectations. Many blue-chip companies from Nifty will declare their second quarter numbers in coming days. Reliance Industries is scheduled to be on October 14th, HDFC Bank and TCS on October 15th, Bajaj Auto on 16th, Axis Bank and HCL Tech on 17th, followed by L&T on October 18th. Inflation data for September, as measured by the WPI and CPI, are due to be released on October 14th. The WPI inflation accelerated to a 6-month high of 6.1% in August and is seen easing slightly to 6% in September. The annual rate of inflation based on the combined consumer price index for urban and rural India is seen coming down slightly to 9.4% in September from 9.52% in August. Both these data gains significance ahead of RBI meet on October 29th and set the currency trend for the week. The Indian rupee has appreciated sharply by around 6.5% since September. The stock markets will be closed on Wednesday for Bakrid. The European Central Bank meeting will be held on Thursday to decide on Euro area interest futures. The eyes of the world are on Washington, closely monitoring political developments in the United States as the partial government shutdown will enter its 14th day on Monday and 3 days away from a treasury shutdown. Investors will look for clarity on US lawmakers extending the US debt ceiling before the October 17th deadline. Without the legal ability to issue debt could cripple the US economy, and it would ripple through the global economy because the US has never defaulted. Congress needs to move forward with a solution that reopens the government and allows it to avoid the default for the first time since the 1700s. Markets have broadly risen in recent days. However, as investors bet on last-minute deal in the United States. Now, a technical outlook on Nifty. The Nifty rallied 400 points in the last 8 sessions, moving in an upward channel. Many technical indicators are still in the positive zone. However, some of them show that any further upside movement will move the index to an overbought zone. The RSI is at 65 and very near to the upper band of its Bollinger Band. MACD is still positive The slow stochastic in the positive zone, but in an overbought area. The index touched the upper band of the regression line, which suggests the near term is capped. The candlestick chart on Friday formed a hanging man formation, which has bearish indication. For the week, the critical support is at 5908, and a close below this could drag down the benchmark towards its 200-day moving average support, as well as the trend line support at 5834 level. Below this, the major support is at 5730. On the upside, the first hurdle is at 6143, and a positive outcome of US political deadlock, if comes, would trigger further bullishness in the market in coming days. Thank you for watching the video. Disclaimer.